I am going to show you the initial setup for the portfolio money management algorithms. I've had the money management algorithms for over 10 years now, and it's taken a long time to develop these. And I want to show you what I'm talking about. This is the concept of managing, instead of individual strategies, managing each strategy as a portfolio. So for example, I have 7 S&P strategies in this workspace, and I have 11 NASDAQ strategies in this workspace. And so there are more charts because the strategies that were not 1-minute charts needed to be converted to 1-minute charts. And so there's some slight differences between those, but the outcome is a combined equity curve intraday. In this workspace, you can see a chart of the NASDAQ, but you can also see the combined equity curve for all the strategies in the 2 workspaces that was previously shown. So, for example, in the past, we've gone over an end-of-day analysis. We exported the end-of-day closed daily P&L from the portfolio calculator to have an end-of-day analysis. This is intraday down to the minute. At the bottom, you can see the equity curve for the combined trading systems performance. And so you can manage this instead of on an end-of-day basis. You could manage this intraday down to the 1-minute increment. You cannot do that intra-minute, but you can do it down to 1 minute. And the reason is you can't pass information intra-bar from one window to another, so it has to be done on an end-of-minute basis. And so it is very incremental compared to end-of-day, though. And you can see at the bottom, the blue represents the daily P&L. So today, our drawdown is in blue, or the max drawdown is in blue. The daily profit is in the blue line. You see the histogram at the bottom, while the blue line up here is the max drawdown on the day from the equity peaks down to the drawdown. So, and then the yellow line is the current drawdown, and the white line, the daily peak, is only plus 270. So we're only up, for example, today, the best we've done today is plus 270 on the day, and currently we're down this shows down about 2,000. Our trading system results today are a little bit better than that, because I want to show you this. The Viper 5-minute version is better than the Viper 1-minute version today. Right now we're trading the Viper 5-minute version. So our results are a little better. Yesterday, the 1-minute version was a little better. So, for example, yesterday's trade, you can see the combined equity curve was up most of the day. Choppy at the beginning of the day, and then up towards the end of the day. And so you can see the white line represents the equity peak, the yellow line represents the drawdown, and the drawdown is basically the difference between the equity peak and the current value at the 1-minute mark. So you get a lot of information with this. You can manage a lot of trades. And what I've done is I've exported this data and I've imported it into a 4th chart. Now this is a static chart. I'm going to show you that. This is a static data chart that represents the daily equity curves for this trading system setup, this portfolio, stock index portfolio 18. This is the equity curve representation on a 1-minute basis instead of an end-of-day basis like I previously had shown you. And so you can end up writing an algorithm to trade the 1-minute version of the combined equity curves, and then feed that back to each individual strategy. In order to implement this in live trading, we would have to take an additional step that I have not done yet. We would have to recreate these workspaces and then take the combined analysis from this indicator in this desktop and feed it back in, and then make the rule based on that. And so we need to find the rule that we want first, and so we use that on static data to make it easier and quicker. And so you can see here, this is the result. This is the raw result. If I don't add any rules, if we just take the trade, we went back 28 months, and it's going to be difficult. Like in my portfolio calculator, you see we go back to 2008 or 2011, and so there's no way that we can do that on 1 minute bars for all these charts. It'll crash this computer, and so we've gone back 28 months right now, and these are the results we get going back on 1 minute bars for day trading 18 strategies. You can see the equity curve and how nice this looks, and you can see 4,027% is the total net profit over closed trade drawdown. And we talked in a previous video how there's max, there's a open trade drawdown and closed trade drawdown. So intra-trade, before you close the trade, that could be a higher equity peak that causes a larger drawdown. But this is the closed trade drawdown, which is where your risk exists from where you open the trade, not the equity peak of that trade. And so you can see the equity curve, and this is, you're just taking long only because you're long only your portfolio, which takes long and short trades. And so there are ways you could. I want to show you the algorithm that I use to test this. So here is the easy language code that I use to test this, and I've tried a lot of different things. This isn't really that proprietary. My strategies are proprietary. The money management algorithms, those are proprietary. You can purchase those separately. Not my strategies, but the money management algorithms to set this up on your side for your portfolios or for your strategies if you want to customize it. But right now, this is just a basic. These are just basic ideas that I've tested. So if the date is not equal to the date of one, mainly it's the first bar of the day. Then we buy one contract next bar at market. We don't have a stop loss, and we exit 1 minute till the close. And so that is the raw strategy that just puts you in the portfolio the way we normally would. And so what's interesting about this is if you look at these results, what happens if we have a stop loss in this? So an intraday stop loss of $5,000. Let's use this one down here. Set stop loss, $5,000. And you'll see what happens here. We're going to look at, let's look at the largest losing day, 14,000. Max drawdown is 26,000. 4,027 net profit as a percentage drawdown. Let's look at the results. I'm going to update this. I'm going to click this, and it's going to add the stop loss of $5,000 on the day. And you're going to see the results for using a stop loss intraday on this portfolio setup. And you can see the value goes down. The largest losing day goes down from 14,000 to 6,325, but your total profit as a percentage of drawdown is 25.22. That means that there are some big winning. You end up doing better and during that $5,000 drawdown than exiting at that point. And so your total net profit goes down, your drawdown goes up. And so it makes the strategy portfolio, it makes the portfolio worse. You keep in mind this is 18 strategies, and so if you have 18 strategies trading at once, then you know it's pretty tight to put in a $5,000 stop loss per E-mini. For example, if you had 10 NASDAQ strategies that were long, a $5,000 stop loss would be $500 per contract, which would only be 25 points, and so that'd just be a blip in today's markets. And so these are some of the algorithms that I've used to test the intraday portfolio money management algorithm setup. And let's look at one that actually worked a little bit better. I'm going to comment out some of these. I'm going to use a $4,000 stop loss, which worked. If I did this setup up here, let's see. If the time is between these two values, 9:30 and 16:10, basically the whole day, and we've had 3 1-minute bars go down in a row. So for 3 minutes, the equity curve has gone against us, and the entries to date is less than 1. So it doesn't matter if we're up or down on the day. If we just get in any time when it's gone against us for 3 minutes, and we use a $4,000 stop loss, let's see what happens. I'm going to verify this. Well, let's adjust this here. If time, we use a capital, and then we verify it. Let's look at the results that we get on this. It will update here. It's updating the results, and you can see here 37.40. 37.40. The worst case drawdown goes down, the largest losing trade goes down, and you're close to that 4,000. And so that could be a good way to trade it like that. Another thing I did was add this. The ADX is strong. ADX means the strength of trend. So the trend could be up or down. Whatever, if the strength of the trend is strong and it's gone down for 3 bars, while the trend strength is strong for the last 10 bars, then this seems to work as well. Let's see what the results are once I verify it. $23,000 drawdown and a 58.30, and so not quite as good. Not quite as good when you have that. The equity curve still looks good. And another thing, so just simplistic deal here is to just use the ADX, and you do get that. It's nice to have this stop loss of 4,000 on the day. So keep in mind this will work on an end of minute basis, and so there can be a fast move on a 1 minute basis. So you see our stop loss is 4,000, but our worst losing day is around 5,800. Here's the equity curve. Because we're exiting at the end of a 1 minute bar, not intra-minute. So 58.30, 23,219 is the max trade drawdown. Your total net profit is less, and so it's pretty nice to have this concept in here. If you use a stop loss of 4,000, I would have to, in order to get this to test completely accurately, I'd have to reprogram. I'd have to take the information from the indicator and put it in each strategy once again in a new chart, as well as this information, and then export the data to Excel for each strategy and do a combined equity curve analysis to see if that actually is an accurate representation. And then that would also be the case for live trading, because you can't live trade this static chart. And so in order to do live trading, I will have to take each one of these strategies and rewrite them, call them a different file name, include the original information as well as the information from this indicator, as well as the rule sets here, and then export the daily P&Ls, add them as a separate entry into the portfolio calculator, and then verify. That's the only way that I know to do this effectively and accurately for complete back testing and live automation to make sure that your results are accurately back tested and also accurately trade in real time. So another thing you can do here is I want to show you this one last thing, because this is an extensive video on portfolio money management algorithms, intraday stop losses for combined strategy analysis. And so the one thing you would have to do here, not the one thing, but the one thing I want to test here is one other thing that has been interesting to me lately, and that is to say the time of day. If the time is greater than 10:30, it's been choppy at the open lately. Seems like every day we start out as a loss down on the day, and the closing price represents the open trade equity, or the closed trade equity, or the actual equity in this. So if it's after the first hour and the close is down, we're down on the close, then buy one contract next bar at the market, $4,000 stop loss. And so we're just going to see what it's like to skip the first hour and get in once we're down on the day after the first hour. What are the results for this setup? So let's take a look here at the results. So in recent trade, it works really well. Oftentimes we ask ourselves, we might see something happen for 1 or 2 months and say, wow, why don't we just adjust the strategy to trade it like that? And the answer is the longer term results aren't as good. And so you can see right here, ever since all month long, you have recency bias and say, man, it's choppy every day at the open. And so what works? And so if we $41,000 on the month for this portfolio instead of up about the portfolio is only up about 3,000 on the month coming into today. And then if we wait to get in after the first hour, skip the chop in the first hour, it's up $41,000. And so why don't we do that all the time? And so your recency bias starts to kick in, and maybe from now on that would be a better approach. But what about this large drawdown, this drawdown that's twice as big historically? So how do you know when to flip it? How do you know you don't? And you can't bias it that much because there is mean reversion in market pricing. There is mean reversion in the way the market trades. And so even though the market is really choppy at the open and then it's more favorable, there are also time periods when it is very trendy at the open and then very choppy at the end of the day. And so right now we're in a cycle where the market's very difficult at the beginning of the day and then very favorable towards the end of the day. But we don't want to bias our systems unless we know how without over optimizing it and curve fitting it. And so this is an important concept. This relates to profit targets. There are many time periods, stretches where tight profit targets work over the course of 1 to 2 months, but over the longer term, they don't test that well. And so how do you know to flip them on for that month or two and then flip them off? Because longer term, that idea has a much worse result. And so that is what I wanted to share with you. This is the initial introduction to portfolio money management algorithms with intraday stop losses on multi-strategy automation, back testing and automation. And I wanted to share this with you. It's very advanced. It's not for the beginner. And it's just an introduction. This is not available right now. I have to finish putting this together and developing it. And the market is closing now, so I want to go to the daily reports after this video. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.